Hey guys, good afternoon from London, and guess who's here with me today? Nick, all the way in from Australia, sitting behind me.
Alright, nice to be here.
So here we are, mission control.
Right, yeah, mission control.
How's it been, Nick?
It's been fantastic. I've been here hanging out with Andrew, learning his process, doing a few videos. Also got my colleague Dom here too, who's in the background. He's very camera shy, so you're not going to see him. But great to be beaming live from sunny UK.
Sunny UK, not so sunny today, unfortunately. It's been a bit muggy today, but it's but at least it's not raining. And you're back. When you're back, you're back to us later in the week.
On Thursday, yeah.
Yeah.
So I'm actually filming all this, guys. So this is layers of inception. You can see. Whoa.
Okay, so there we are. Hi, Jenny. Hi, Uncle Andrew. She calls me Uncle Andrew. Hi, Morphs.
Hello, Morphs.
And Geo Scarpa.
Alright.
We'll see you there as well.
Let's make some money.
Okay, so what we're looking at the moment, obviously we've had the PMI numbers out in Europe earlier today, missing target somewhat in the European PMI. Also, the sterling PMI came in a lot lower than expected, which is why we've seen the British pound had a fallout since the opening. The bullish momentum, I think, is still there, Nick, in the British pound, and this healthy pullback is gives us possible some buying opportunities. So I'm looking at the strength meter here at the moment. This is on the 1 hour. Okay, so this is basically what's happening at the moment. Pound's weaker. The stars of the show have been the Canadian dollar. Canada is closed tomorrow, so if you are taking Canadian dollar trades, then don't expect too much activity. But it is the star of the show at the moment. It's pushing up, and it's also being dragged up by the greenback. Let's have a quick look at the US dollar to see where we are. Coming back into, it's a big move we've seen in the US dollar, recovering from its lows from last week. We've had a 9-month low now in the US dollar, and the last couple of trading days has seen some bullish momentum continuing back into that.
What's caused the bullish momentum?
I think it's basically, what's basically happened. The negative momentum is because of all the main central banks around the world, the likes of the UK, Europe, Canada, have all basically been talking hawkishly over the last couple of weeks, and that's really dragged down the US dollar. But because you've had the weak PMIs numbers out of Europe today, and this is data driven, it's affecting the euro to the downside. Now, if you remember, the dollar index is 58% made up of the euro, so any euro weakness is going to reflect higher, more so on the dollar index.
This is because euro is weak.
This is because the euro is weak at the moment, which is on by looking at the data that's coming out weaker than expected PMI numbers. Now, PMI stands for Purchasing Managers Index. It's a great leading indicator as opposed to the lagging indicators. This tells you what the big business people are predicting for the future. So it's a good leading indicator, which is why the markets do like PMIs. And of course,
can you trade the dollar index?
You can trade the dollar index. I've got no, I don't trade it, to be honest. No, I mean there's no because I don't need to. You can trade the euro against it. I mean, I look at it all the time. There's key levels in here. I've been looking at the Trump candle. If you've been following me for the years, if you go back to the daily here,
you love talking about the Trump candle.
I love talking about this candle here. It's the Trump candle here. It's bang smacking into that daily moving average, the low of it. It's been in that trading range. This is on a different chart, but it's been. I do like trading this because it's been so significant. Okay, now look where it is. I mean, this is the Trump candle. Okay, the base of this Trump candle, which was back on 8th of November when Ohio and Florida and all those results were coming in. It's going to be Armageddon. The dollar's going to hit the what have you. Massive range on that day, 280-point range on that day. The dollar index now is coming straight back into here, and it's stalling again at this level. I mean, it's stalling. Look, this is. I haven't made this up. This is the bottom of the Trump candle.
You haven't made this up.
No, I didn't. You asked me why. About the dollar index. I haven't made. No, what I'm saying is, I mean, it's again. This is a level of structural resistance to the upside. So, as I was saying on my stream this morning, I think for us to break into the 95.80 up to the 96 handle, you're going to have to start seeing either some extreme euro weakness or some data coming out of the US that's particularly strong. The data out of the US has been weak for bloody months. I mean,
Will's telling me to get close to your mic, so it doesn't mean that I'm getting too close and personal.
Yeah.
Take it.
Okay, so so the euro's been, the dollar index has been weak on the back of really soft data. The Fed have been promising hikes this year. They've been promising 3 hikes for next year. There's an 80% chance that they'll hike again in December. But the markets are now looking at the forward, 2018, 2019. Remember last year, Nick, they promised 4 hikes and they delivered 1. And the market.
What's the prediction for the remainder of the year?
The remainder of the year, they'll have another 1 more 0.25% hike between now and end of the year, and the dot plot is the data points for 3 hikes next year.
Right.
But the thing is, the data that we're seeing out of the US is just very, very soft, and it's going to come to a crescendo at the end of the week with non-farm payroll. Well, this is going to be an importantly watched number because we've just seen some really soft data out of the US, and I think for the US dollar to start pushing back up to the 96 handle to get into this range again, to get into this trading range again, I think you're going to have to start seeing some really strong data coming out of the US, and that's why obviously non-farm payroll end of the week is going to be looked on. So the Trumpflation trade, that seems to be pushed down the road as well. You've got you've got the fiscal plans that Trump had been promising, his tax cuts, his infrastructure spending. He's just fighting so many different wars now, fighting wars with the media, that he's just not getting any of this done.
So what's your view long term, more dollar weakness or?
Absolutely, I can't be buying dollar at the moment until I see, the Fed can't ignore the stats. And at the moment the stats are low coming out of the US. They're talking about growth he wants 3% growth. Growth of GDP is at, more looking like around the 2%. So I think dollar weakness, and I think the market has to brace itself for dollar weakness.
So that means we're buying the euro dollar, we're buying the pound dollar, we're buying the Aussie dollar.
Yeah, I like the Aussie dollar. Aussie's had some good moves. Aussie dollar, euro dollar, pound dollar. I mean, pound dollar is one that we've been looking at, but unfortunately the pound comes into massive supply above 1 or 130. Last time before the election, every time we got up to 130, the institutional sellers were coming in. You can see that just by the price action. So I like pound dollar, but I do think that I want to see us trade above 130 and establish above the 130 level. I've been talking about it for the last 6 to 7 months. My trade to Rio, or trade to the beach, is you buy pound for a couple of years, and you're going to sit on a beach and walk away, because if you can buy options in pound, leap options, which is long-term options, I think with Brexit, in years to come.
So are you in the pound at the moment?
I'm not in the pound at the moment. I'm looking to go. I'm going to do pound yen potentially at the moment. Yen still is the weaker currency, so that's what I'm looking at. The pound has had a pullback on the back of PMIs, but I think the longer term trend is for pound up. But I want to pick it against a weaker currency. Okay, so really looking at pound yen. Jenny, I know this is one of your favourites. I don't know if you've been trading pound yen this morning. Nick and I and Dom have been doing some off-screen work. And I know you're long momentum for this as well, but I think this still has the momentum. In fact, this is quite a nice little pullback for me into structure to the left of the chart. So the bias still to the upside, still firmly above the moving averages. This is a decent sized pullback now. We've had a pullback of 45 pips, which is basically a classic way I like to trade, is a pullback into support or resistance if you're selling, of course. But I also like to look at the ATR. ATR stands for average true range, which basically means the range.
So what are you looking at? That's at the bottom of the chart there.
This is the bottom.
What's that telling you, the ATR at the moment?
So the ATR is a brilliant tool for a number of reasons, but it's a measure of volatility. ATR stands for average true range. That basically means the range from the high to low in a particular time period.
Yep.
Okay, and the average I look back is over a 14 period look back. Okay, now I also use ATR for stop loss levels and take profit targets, because if the market becomes very volatile, like we saw last week in the pound against the yen and so forth, the ATR, look, you see the ATR here, it moves massively up. Well, that basically means I want to widen my stops. I want to widen my take profit targets. I don't want to be trading, narrow stops if the market's very volatile, and the ATR is a good.
So right now it's looking like it's on the decline though. So how does that affect your trade right now?
Basically, I mean, I'm not trading off the ATR. I'm not trading. What I'm saying is that I'm looking at the ATR level.
Yeah.
It's trading around the 22.
Is that good?
Well, it's not a matter of being good. It's a matter of I like to use a factor of ATR. So if it moves twice its normal range against its trend, which is the longer term trend, that to me signals an entry level.
Yeah.
If it moves 5 times the ATR, i.e. 100 points, that could signal, you know, an end of the trend. You know, market starts to trend the other way. And I always say, you know, the trend is your friend until the bend at the end. At some point, there will be a bend at the end.
Yeah.
You know, and I would get caught at the bend at the end, and I have no problems getting caught at the bend at the end because, you know, that's just what.
Okay,
you know,
so this ATR at what was it,
it's 22.
22. So how does that affect your?
So if you look at my strategy, I like to use a factor of it. So I use a 1.5 or 2 ATR. So now we've had a pullback of 2 ATRs. That's a decent sized pullback.
So pulled back
from the high.
45 odd pips.
Yeah, 45 pips. So that's a factor of my ATRs. Okay. I'm talking to you now, Nick, and I'm missing my entry. But if I look to the left of my chart, if you look here,
let's get in then.
It's also got structure.
Bloody hell.
To
Money
the.
be made. Let's get in there.
So it's also got structure to the left. So this is a good level. So on this account, it's only a 20,000 account. So I'm using a quarter a percent risk. Okay, and I want to have a 40 pip stop loss. Okay, on a £20,000 account.
Yeah.
Okay, so on a £20,000 account, that means I've got to do 0.18 of a lot. Okay, and that'll allow me to lock in the maximum of a quarter% risk on that account. Yep. So I'm just going to buy a quarter% risk on it. 0.18. Oops, excuse me.
Do you want to put 10 lots in there just for the sake of the crowd?
10 lots.
Yeah.
Well, that doesn't really.
It doesn't work out. I'm kidding.
No. I'm not doing 10 lots on there. Okay, so I've pound along, 18 lots there. I'm just going to put a 40 stop in there. 10 lots, gosh, I'll get margin call before I know where I am on that. So I put my 40 pips stop loss. So I'm actually going for a target to the upside.
Yep.
Okay, which is this 1618 extension. I know Jenny's targeting 148.50, as are quite a few in the room, but because it's a 40 pip stop, I'm not going to be shooting for the stars in here. So I'm quite happy to take profits up to that level. So, oops, oh dear. So my take profit target will be up there. So I'm getting it's a 100 pip profit target, 40 pip stop loss. That's the risk reward of 2 to 1. It's good risk reward, controlled risk. That's typically how I trade, Nick. That's what I do all the time. I look for trends. I look for pullbacks into a trend with targets.
The take profit is 2 ATRs, which you've put in it there. 40. How many pips was it? 45 odd pips.
My stop is 45 pips.
Your stop's 45 pips. And
my take profit is 95 pips.
Okay. And would you close that early if it went into profit quickly?
I wouldn't trade it early if it went into profit. I won't be touching this one. If my stops were much wider, if I'm using a 100 pip stop or something like that, then I'm not going to see something go into profit of 100 pips and then lose money on that trade. So I'll move my stops up if the stop's wider. But 40 pip stop, I mean, I can't micromanage that. It's just too close. So I'll let that one go. My stops, if they're wider.
So the stop is based on the ATR. The take profit is based on whatever.
But I'm also looking at structure as well. I mean, that was an ATR stop of 40 pips ATR. But I'm also we'll look at price action as well. I'm placing that now. I mean, if you trade it down, if you take the stop down at if I take my stop down to 72 pips, I mean, I still get a 1-to-1 on it. So maybe in hindsight that might be in a better place. Placing it below yesterday's, taking it below Friday's low could have been is also a good place to place the stop. So
okay. So what you also got a few lines there too. Are they moving averages or what are they?
These I use the same moving averages on all my charts. They're basically moving average, which is
what kind of moving average?
Okay, so these are exponential moving averages, and I always use double up. So I use 10, 20, 40.
Yep.
I used to use 5, 10, 20. I find these are much better for trend. I don't trade off them at dynamic levels, but I find them very good visuals for me to predict, to show me where the trend is going.
What about the big grey
at
the bottom?
That's the 200 moving average.
Simple or exponential?
Exponential moving average. Now,
why do you use exponential instead of simple? Exponential
is certainly on a 200 or the longer time frames. It gives more weight to something that's more current, and I think it's pretty fair to say that most of the institutional banks look at the EMA, and that's basically what I look at it. Now, if you look at any analysis, they talk about EMA, and it basically gives more weight to this end of the of the line.
Yep.
As opposed to the simple one. But well, I use that. I mean, I don't trade off the 1 hour, but you'll find institutional traders. I mean, look, this is the 200 daily. This is the daily now. It's just respected. They're just so well respected.
Yeah, right.
This is the the pound yen.
Look at that trend, like just dancing
Just
top,
about,
top of it.
absolutely, yeah.
March.
Yeah. And the other way I look, so, I mean, I'm not a huge Fibonacci trader.
I thought they used simple moving averages, most of the banks. No, obviously not.
Well, I think EMA is. I think they use exponential.
Okay. You'd know.
Well, that's what we used to certainly use. Now, I'm not a massive Fibonacci trader, but certainly, you know, the extension levels I think are very, very powerful.
Mm-hmm.
So that's basically what I've done here on my analysis here. Let's go back to the 4 hour. So I've basically taken the swing high to the swing low, this trading range.
Yep.
Okay, now we've broken out of the trading range in today's trading session. I'm looking for a continuation of that.
Mm-hmm.
And my first take profit target is at the 1618 extension level. I encourage anyone, you know, that looks at charts and looks at Fibonacci's, just look at 1618 extensions, because they are very, very powerful. And if that aligns with any structure to the left of the chart, even more powerful.
When you talk about structure, you're talking about price action.
Price action, where it was respected before.
Yeah. Support resistance.
Absolutely, yeah. Yeah. So
yeah.
So basically that's where we are. So
cool. Any questions from the room there? I'm trying to get as much of this secret sauce for you as I can, bring stability. If I'm missing any questions, please speak up.
I'm looking at the dollar CAD at the moment. The dollar, this is the US dollar against the Canadian dollar, flatlining today. So they're flatlining today, but this definitely has the continued bias to the downside for me. Okay, now oil prices are recovering. You've also got the RBC, which are very, very hawkish in their talk. Some decent numbers coming out of Canada at the moment. Their markets are bracing themselves for a hike. You know, and this is a good momentum trade to get involved in, I think. And you know, this is one I've been looking at for a while. Yeah. Good, strong momentum to the downside. Again, selling into this.
So where are we going to try and sell?
So potentially, I mean, on the 4 hour, you know, we've had a. I mean, I normally would take an entry off the 1 hour chart. Okay, so the lows today, we've had a 38 pip pullback already. Okay, the ATR on the dollar CAD is only about 10 pips at the moment. We are now 10 pips. I mean, quite frankly, we haven't broken through Friday's highs, okay, which is a significant level by looking left, because you've got the low from the fallout. It's a support level, it's a resistance level. So as long as we maintain below the 129, 130 level,
yep,
this just for me is a continuation to the downside. Now, if the US dollar starts to, you know, so the US dollar is at the moment having a bit of a couple of days recovery on the back of not very much, maybe a bit of profit taking and euro weakness. But as the US dollar continues to weaken, you know, I like to buy it against something that's strong.
You've got holidays too, right? So
holidays, yeah, in Canada.
Do you have a trade during public holiday? Like the US, the Canadian dollar, they both have a holiday, aren't they?
Well, holidays, no. 4th of July is tomorrow in the US. Today's Canada. Okay. Today's Canadian Independence today. But
right.
yeah, I mean, I don't not trade because of holidays. I mean, I always find many reasons not to trade. But yeah, I would trade over holidays if there's price action showing me it at the moment. You know, you're seeing price action on the meter. You know, there's buying pressure coming into the in the Canadian dollar at the moment, and the yen continues to weaken. You know, so yeah, I'd trade the CAD, the yen. I mean, look, buying blue across all time frames, yen weak across all time frames.
Okay.
You know, New Zealand dollar under pressure at the moment as well. So certainly, yeah. But also let's have a look at the euro against the pound. Sorry, beg your pardon, euro dollar.
It's come off, isn't
It is. Well, this is the euro weakness on the PMIs and so forth, and this is why the indexes has started pushing up. So the euro is coming back, but again, it's coming into a potential buy level here. I mean, this is a structure. This is the 1 hour. My only concern is here, is this the bend at the end? We're trading now the wrong side of my moving averages, so I would tend to want to leave this at the moment, because this could be the bend at the end.
Yeah.
I like to be on the right side of the moving averages. As I say, I don't trade them dynamically as levels,
Yeah.
but I want to be on the right side of them, and mindful that a trend trader does get caught at the bend at the end, and if I can avoid that, then I will.
So when you look at the moving averages, are you mainly looking at the 1 hour?
I'm looking at the bunch. I want to see them fan out.
So what time frames though are you looking at?
I'm looking. Oh, beg your pardon. 1 hour, 4 hour, predominantly.
Not daily?
No, not so much. No.
1 hour, 4 hour.
Yeah, 1 hour, 4 hour. Yeah, and I might even drill down to the 15-minute for a more precise entry. But I like to see this environment, not where we are at the right of the chart. I like to see this. Okay, this a fanned out moving averages. That's just a visualization for me of continued momentum, and of course on the 1 hour we've dipped below. So although the euro dollar bias is still to the upside, I'm not going to be trading this at the moment, because this could be the bend at the end. So I'll just leave that alone at the moment until I see some real strength and weakness play against each other, and I don't think we're seeing that at the moment in those two currency pairs. Okay, you're seeing some strength coming into the Aussie dollar, Aussie New Zealand. That's would have been one of your favourite pairs, isn't it, from over there, Nick?
Yeah, we'll trade a little bit. Yeah. I've never seen you trade Aussie.
Yeah, I've traded a couple of times, only since I've really come on to the public platform. I mean, before I came on streaming, I was really focusing on major 6 currencies. But yeah, I've been trading this at the moment. This has got potential now to continue going up. I think we're nicely above on the 4 hour. Aussie has just got some decent data coming out of there still. We had some Chinese numbers out as well overnight, PMI numbers which were okay. That pair does seem to want to start pushing back up. It wasn't too long ago we were up at the 109.10 level. If we break out of this trading range, you could see us back up here. We've tested support 1, 2, 3, 4 times there on the downside in the 4 hour, but I still think bias is to the upside. So that's basically what I'm looking at the moment. Still buying bias, still long British pound, pushing up again at the moment. Not so committed to the dollar strength at the moment. I think this could be just a temporary thing. I want to see it certainly break into those resistance levels on the index before you start thinking about buying US dollar. And also you want to see some data coming out of the US that's slightly more bullish than what we're seeing at the moment. Anyone want me to look at a particular currency pair? Just while we're on, I'll have a quick look at some trade ideas. What's Tony been up to when we were offline? Let's have a look here. So Tony is... beg your pardon, sorry. So Tony is basically... What am I doing, he says. Let me close that down. Sorry about this, guys.
Double click,
okay.
There you go.
So Euro Oz, buying Euro Oz up to 148. He's basically in at 148.60, and dollar Oz at the moment is Euro Oz. I mean, is at the moment 148.46. He's slightly offside at the moment, but he's got a good stop loss level down at 147. Looks like 75 area. Let's see what his line of thought is in there. Buying on RBA neutral, resumption of the Euro Aussie uptrend. Well, I like that. He's following the trend to the upside. Again, it's quite a clean chart. I like the clean charts. He's got a decent risk reward ratio on there. These are great risk reward ratios. That's about, looks like to be about 3 to 1 there. Great when they come in. The only thing about having long, wide risk reward ratios is that you've got to have the mentality for it, because you get quite a lot of losses along the way. So that's where he is on that. And what have we got from FX Shami? Long Euro Swiss. So long Euro Swiss, beg your pardon, short Euro Swiss. Okay, well that's a counter trend trade. Obviously the longer term trends to the upside. You got a, you know, again, decent risk reward ratio. So yeah, coming into this trend line, previous trend line support, possible trend line resistance for a rollover. And indeed the euro is under pressure at the moment. It was a couple of hours ago. And Euro Swiss, we are currently, where are we in the Euro Swiss? Mixed up here. Oh well. There it is. Euro Swiss must be on my chart here. Go on, Nick. Kill some air time. No, I can't. There we go. Where is he?
Yeah, it's just there in the grey.
Down?
In the middle, there you go.
Goodness gracious me. Going blind. So Euro Swiss shorting, and you're short at the 9.35. So it's pretty much flat at the moment. So yeah, I wouldn't be. This is a counter trend trade. You know, it's not one for me. I prefer to be on this side of it. But yeah, it could work certainly on the 4 hour.
It's not about pullback.
Yeah, not about pullback in for a longer term trend for the upside. Yeah. Okay. Right, guys. I'm going to leave that there. We've got to get on and do some.
Is there any questions for us?
Yeah, do some chats. Will be on again this afternoon. Let's have a look, see if any chats are coming through.
Dollar ZAR. No, we're not going to look at Dollar ZAR. What do you see that even?
What's he saying? Dollar ZAR, South African. New Zealand CAD, if you can, please. New Zealand CAD. New Zealand CAD. Now, this is definitely biased to the downside. At some structural support here from Thursday's low. Longer term time frame to see where we've got some targets. Well, I'm certainly would be. I haven't traded it for a while, the New Zealand CAD, but certainly, you know, this is a decent pullback on the 15-minute chart into some structure. My bias, I'm not going to trade this online at the moment, just because I haven't done full analysis. But my bias certainly would be continuation to the downside. You know, we've got, you know, we've had a 15. This is a 15-minute chart, so obviously tight at ATRs. Got a 16 ATR, 16 pip pullback. I prefer to trade off an hourly chart, quite frankly. And we are coming back into some levels here. So this is a good structural level from the last week. So if you're a trend continuation trader, selling around the 94.75 area would make sense to me. So my bias would be to the downside on that. Of course, you've got the Canadian strength playing in this one, but also the New Zealand dollar. You know, this is one of the reasons why we trade the Forex, because you've got two different currency pairs working in opposite directions. New Zealand is a weakening currency at the moment, which we can take advantage of by selling that and buying the Canadian dollar, which is the stronger currency. So momentum certainly to the downside. So yeah, Wing FX. I don't know if you've got a position in that, but certainly, you know, certainly that could work. Euro CAD. Well, we know what's going on in the euro. Of course, the euro's been sold off. Some corrections going on in the euro CAD with, I'd say, weaker than expected PMIs, and the CAD is pushing up. So again, this one is also pushing down, coming into some structure to the left of the chart. Euro CAD 1 hour levels to enter for me would clearly be at 147.85, which is about a 40 pip pullback. So if you take a 147.44, it is a 33 pip pullback. That's a 2 ATR pullback as well. So Euro CAD continuing to the downside, guys.
What about the dollar ZAR? I don't even. Do you have that?
No, I don't. I never traded it. No.
Never even seen a dollar ZAR chart.
I think he's just trying to catch us out.
Yeah.
Pounds are... Is it dollars are or ZAR dollar? Don't trade it. I've never traded it. Never even had it on my screens. So I might have to leave that one. So when I'm analysing a currency pair that I've never seen before, typically I'll look at the longer time frames. So I'm panning out of the 4 hour, of course. Okay, so you can see the momentum to the upside above the moving averages. I'm actually going to look at the daily as well because I say I haven't been trading it. Momentum to the downside, no, it's flat, isn't it? I mean, if you can't make money out of the 28 major pairs or majors and minors, then yeah, I don't know. Not committed to this one either way.
No, close it down.
Can't see anything there. Can't see anything there. Jenny, I've never heard you talk about $ZAR before.
Pot on making trouble as usual.
Yeah, Bitcoin. No, I'm not going to pull up a Bitcoin chart because I don't have one. Right, so you're going to wave goodbye to Nick. We're going to come off stream now, and we'll be in the chat, keeping an eye on what's going on, chatting some ideas. So keep the ideas flowing. Put some trade ideas up. Been a bit sparse this morning. Bit of a slow start to the week. So thanks FX, Shami and Tony and of Night. But let's see if we can get some more trade ideas coming in. Of course, expecting not a lot of activity into the US close tomorrow. But of course, all the fun starts midweek with FOMC on Wednesday. And then, of course, non-farm payroll at the end of the week. So that could be something, a negative non-farm payroll, a soft non-farm payroll could see that dollar push considerably lower. And I think...
Yeah, and we're about to go for a drive in Andrew's convertible. I'll be picking his brain on what it's like to be a professional trader. So if you have any questions, please drop them in the chat here. Not in the chart, in the chat here. And I'll make sure that he answers them. There's no question too tough. None.
Good. Well, thanks indeed. I'll be back on for the London wrap this afternoon, which is about 4.5 hours from now. And let's see if we can make some pips.
Yeah, thanks guys.
Good luck.